It's time for our wealth tip of the day, hedging against short-term volatility. With the presidential election just 2 weeks away, here's how the stock market is accounting for potential disruption and how you can take advantage. Now, as a reminder here, long-term investors should try not to make too many moves since historically, elections do not change the trajectory of stocks, which we'll dig into in a minute, but we have seen some recent changes as investors prepare for either a Harris or Trump administration. I want to kick things off with a little sector action since utilities and financials have both ripped higher since the start of the year. You're seeing that utilities are up nearly 30% since the beginning of 2024. Now, some of this has to do with the artificial intelligence trade and the energy demand related to that AI boom. But utilities is also a defensive play and typically does well no matter who is in office. The same can be said for financials. They're also up 25% since the beginning of 2024. Financials have reported strong earnings under the current Democratic administration. So if Harris were to be elected, that status quo would likely continue and bode well for the sector. Conversely, a Trump administration could be deregulatory for banks. So either way, good news for financials. I also want to take a look at stocks versus bonds here. And I hit the wrong thing, but here we go. There we go. Stocks versus bonds. We've seen stocks outperform bonds significantly, especially in recent weeks, with the 10-year Treasury yield trading around 4.2%. This comes as traders bet on a higher for longer policy shift from the Federal Reserve, given the strong growth of the U.S. economy, coupled with strong employment. But inflation remains a risk under both administrations. Economists have also said that a possible Trump presidency could lead to higher inflation over time due to his proposed tax cuts and push for more tariffs that would force a higher interest rate policy from the Fed. But while we're talking hedging, we should look no further than gold. The precious metal has been on an absolute tear amid all of these uncertainties, not just the presidential election, but also the conflict in the Middle East. Gold, which has hit multi-year record highs, is often referred to as a safe haven asset. So it's no surprise that we're seeing gold pretty much pace with the S&P 500. Finally, I mentioned how long-term investors don't need to be too concerned here since stocks normally go up. And if we take a look at the S&P over the past 10 years, that index is up more than 200% despite the various changes at the government level. Yes, there's been short-term blips as we've seen. However, if you are able to really weather that storm, the markets have remained incredibly resilient there. So something to look out for as we enter these periods of uncertainty, these periods of volatility. Just remember this chart that over the past 10 years, you could have seen a return of more than 200%.